This is NAI Global's Diving into Commercial Real Estate.
Today's podcast is brought to you by Real Massive, commercial real estate's real-time data provider and marketplace. NAI Global professionals now have free, yes, that's right, free access to Real Massive Data Queue, a property data platform with comprehensive data on 30 million U.S. commercial properties. Search for sale comps, identify on and off market deals, analyze market trends with data that is updated in real time. Analyze up to 250 data points per property and export data to Excel. Access DataQ for free for the rest of 2020. To learn more, sign up for your free account. Visit go.realmassive.com/NAI. Again, that's go.realmassive.com/NAI. Welcome, everybody, to Diving into Commercial Real Estate, NAI Global's podcast, the June 2020 edition. I'm Cliff Moskowitz, Executive Vice President of NAI Global, and we have one of our favorite guests with us today, Andy Farbman. Andy's the CEO of NAI Farbman Farbman Group, a leading full-service commercial real estate firm handling all facets of commercial real estate transactions, from property management and leasing to acquisition and dispositions. Andy's firm manages more than 25 million square feet of office, retail, and industrial space throughout the Midwest. He's been responsible for purchasing, repositioning, and developing over $1 billion in commercial real estate. And he is a Michigan Wolverine, but we're not all perfect, so we won't hold that against him today. Welcome, Andy. Thanks for joining us.
Well, Cliff, it's good to be here, and we can't all be Wolverines, so I understand, but it is always great to be one.
Except during football season, but we'll talk about that another day. So the focus of today's podcast is we just wanted to, given your intricate knowledge of real estate from all these different aspects, running a brokerage firm and also being a pretty significant private owner of real estate yourself, just wanted to get a pulse on what you see going on the ground and kind of what things look like going forward from where you're sitting. So perhaps we should start with the lifeline of real estate, which is, of course, the income and the tenants paying rent. And would love to hear throughout your portfolio how you're doing in terms of rent collection, if you're doing any lease workouts or modifications, what the process is for that, and just kind of where you stand on that.
There's definitely some haves and have-nots, and there has been a lot of attention drawn to the retail space, and the retail space has definitely been the most challenging aspect of our portfolio to collect rent. Here at NAI Farbman, we collect about $10 million in rent a month, and we are averaging over $8 million, but less than $9 million, and it definitely favors the office and industrial sectors are definitely responding better, the tenants, to paying rent. The commercial side or the retail side has been difficult at a lot of properties, specifically national chains and some mom and pop restaurants have had a very, very difficult time adapting to this temporary shutdown and some of the new rules and regulations that is heavily impairing the retail tenants. But there is pain across the board, and there is interconnectivity of tenants. There are tenants that are medical related, medical staffing related, that are having a difficult time making rent, and there are also travel agents and companies that are associated with the travel industry that are having a difficult time. So I would say that rent collections in general, we would say, has been better than we had anticipated when we were sitting there looking in April or May. The only person I really answer to is to my father, and my dad in his late age. He always says to me, "Did we collect the damn rent?" And so it's a very difficult answer when you have tenants that are not paying rent. So we're probably all a little more aware of our tenant base and our individual tenants and what they do for a living, and are watching it at a closer level. I can tell you that April was the best month of the bunch. May was probably the worst of the bunch, and we think June is a little better than May. And we also can tell you that we felt the PPP stimulus dollars that were being put to work into the small businesses. You could feel it. You could feel tenants getting funded and paying rent, because rent was one of the approved expenses that is going to be forgiven through the SBA program. So I don't think it's certainly not doomsday in office or industrial, and we don't do multifamily, but we hear that is also collecting pretty well, and it is obviously very tricky as it relates to the retail piece.
Well, that's great. That's actually better than I would think. It sounds like 80+% being collected. That's actually a pretty strong number, just given what's been going on the last few months. So that's really good to hear. And you had mentioned office, and I know you're concentrated in Detroit, but also outside around the Midwest, some urban, some suburban. There's been some talk of possibly a big bump in suburban office. Is that something you guys are looking at, or where do you see opportunities coming through as we get into the future of real estate?
So when I started buying office buildings in the late 90s, the most important question on our tenant interview when we were buying properties was the question of asking the tenant where the CEO lives and where the CEO plays golf. And if the answer was farther than 10 miles, you would figure that there would be a reason why the CEO would conveniently come up with an excuse at why this location no longer works for them, because they wanted to be closer to home. When you fast forward it to 2019 and 2020, it was a complete opposite of that trend, and that the employer was traveling much farther than the employee, and that really was because we were in full employment, and employers were looking to fill jobs with wanted talent, intellectual talent that seemed to be in city centers. So I think a lot of this is going to come down to what the CEO and the other C-suite folks decide they want on the other side. So, and I think that that this could be an excuse, and I don't use that word lightly. It could be a reason to push some of these companies that were traveling into city centers to move back to suburbs closer to the C-suites, so that the C-suites are have a shorter commute time. But they will use things like safer, more spread out, better parking, less expensive rents, and obviously there's been a big discussion on density of population inside of buildings, and so we believe that is going to make a change. So tenants are going to probably care more about how much space they're in and what the rents are, because it all kind of goes into your occupancy costs. So we could see a trend line that certainly pushes to suburbia.
Interesting. And I don't know if there has been any new deal generation lately, but I'd be curious if tenants are requesting different TIs in terms of space design and things like that. I'm not sure if we're far enough down the road to know that yet, but I'm not sure if the bench seating, packing everybody in an office, no enclosed offices, which was kind of the trend for a while, will continue. Would love to hear your thoughts on that.
So I can answer the question twofold. The first fold is that companies are making plans to going back into the office. We opened up our office in mid-May, and so the state of Michigan lifted restrictions on construction management and real estate companies at that point. And so we had to be very thoughtful at how we were going to safeguard our tenants and safeguard ourselves. And we got to practice on ourselves because they rightfully put us back to work to live in our own environment. So in doing that, there were clear things that needed to be done. Bathroom capacity was a big thing. Vertical transportation is a big component of it. And then in-suite experience, you know, I didn't know what a sneeze guard was. I now hear the word sneeze guard every day. I feel like if it were one of those games, like like you see a punch buggy or something, if someone punched me every time the word sneeze guard went up, I'd be black and blue all over because I hear it every day. But, so there are ways in which we're incorporating this. I do believe that bench seating is going to be a very difficult sell to employees that care about their well-being, and certainly until there's some sort of cure or vaccine. But it may be even going into the future. I mean, we clearly have become a generation that washes our hands now. So that's so there's some things here where we are definitely changing some habits. As it relates to new tenants, it's an interesting question. We have probably 50 active lease negotiations at any one time. And I can tell you that tenants are being thoughtful. A lot of it is furniture related. Some of it is, some of the trends that were in office are definitely going to be challenging to come back to. So so we're seeing it across the board. We haven't seen an increased footprint yet. And that's been some prognosticating on some people, is this idea that if we go back to offices that look more like our parents than our offices, that we're going to need way more square footage, because obviously the square footage per person of an old school law firm was 300 square feet per person, and now we're in this range of 150 square feet per person. I mean, something's got to give on that. And so so I think we're gonna see that change, and we're already starting to see it. But most tenants right now are in survival mode, not long-term focused on on where they're headed.
Mm-hmm. That's interesting. And there's this big seems like everyone thinks that because people are showing they can work virtually, or maybe not travel and have Zoom meetings, that that's going to be the future. I personally am not so sure that is going to be a long-term thing. Maybe some more flexibility, but I think there is still some benefit to face-to-face, whether it's with your coworkers or certainly meetings with clients, that sort of thing. Curious on your outlook. Do you think these changes are permanent, that people will be more virtual? Or do you think it will kind of go back to the way it was once, something changes, whether it's a virus or a treatment or something else?
Well, it's an interesting question, and obviously there's going to be some change. The work from home concept and the idea of work from anywhere concept, from an employer perspective, is an interesting one, right? Which is, before you had to figure out an office that was close proximity to a workforce that you could, handle growth of your company, creation of your company. And this idea that, if you don't have a physical presence or a physical office that you could hire anywhere across the country or across the world to fill a skill set, that's very appealing for corporations. The reality is, though, that while it sounds appealing, it's appealing when you're filling jobs, not when you're keeping jobs and keeping employee and keeping loyalty and creating company culture. All these things that I think became very apparent in the newest of offices. So I don't think that it will be as dramatic. One thing that we've been seeing is some of the cloud-based companies pushing this agenda, and that that doesn't surprise me that Facebook, that Google, that Twitter would want a world in which everyone could work remotely, because they're benefited by that through some of their investments in the cloud. So I think we're going to have to see some of this come out and play, and how it really gets to resort. But I think when you ask companies today how the work from home experience is going, you get a very, very different answer depending on what age group you ask. If you're a parent that has 3 and 4-year-old kids that you're the daycare and the teacher, it's a very inefficient system. But if you're an empty nester and you've got a beautiful home office, it's probably a pretty nice way to gain an hour a day of not commuting. But when you really aggregate the efficiency, most companies are still being efficient and can still run, but they're not creating ingenuity. They're not. The collaborative nature of ingenuity in places seems to be paramount, and seems to be the reason for why offices will continue to exist.
Yeah, I tend to agree with that, and also the learning and training of new employees as they come up. So I think that's going to be important face to face. Let's move over to the financing side of things, if you don't mind. Curious to hear, what you're seeing in the financial markets. Is financing available for new purchases? Are the banks overwhelmed with, the government programs and the PPP and more focus in that area, or is there some debt out there that you can get for purchases?
Well, that's a big question. We have closed some transactions for our clients over the last couple of months, so we do know that financing is available. To look at financing, you really have to talk about the 4 food groups, which are the banks being one component, the life insurance companies being one component, the securitization CMBS market being one component, and then this alternative lending, mezz lending, groups that have been created since the last crisis, the unregulated CMBS, as I like to call them. So it's across the board. It's different, right? So CMBS has securitized 2 deals since kind of the shutdowns, most of which were already in action and in place, but they did sell through the markets, and spreads have widened, but interest rates have lowered. So the actual cost of CMBS paper today is probably pretty consistent to where it was a year ago. Most people are saying that 65 is the new 70, or 60 is the new 65, and that's obviously loan to value. And so you're seeing the risk threshold come down a little bit, but the paper will be available, and there's a lot of incentives to the whole entire market to keep that industry going. The banks, as you mentioned, the banks are tired right now. The banks are tired because they have all these federal programs. I mean, you can't rush out these billions and billions of dollars without creating lots of red tape and converting a lot of your production people into SBA experts, into Main Street lending experts. So, I think banks have their hands full for a moment. I think there's probably a pause button. The life companies are definitely still lending, and it's a great source of capital that's out there. And then on the alternative lenders, some of the mortgage REITs and some of the private equity backed mezz lenders are playing. They're obviously charging more for their dollars today. So yes, it's not stopped like 08 and 09. It's very much alive, but it's definitely coming down on the risk level and coming up on the price level. Certainly the price as relates to spread.
In terms of underwriting properties, as you're looking at opportunities out there, I was just talking to an appraiser buddy of mine, and he was saying how they're planning to be very busy, but it's very challenging right now to do an appraisal of a property, just because the transactions that occurred maybe 3 months ago are not representative of what the market is now. And so comps, cap rates, all that's, very difficult. So I'm sure, as always, you have a number of transactions you're looking at on your desk right now. What kinds of things are you looking for in terms of underwriting those deals? Are you looking more at just straight cash flow, or how are you looking at those deals now?
It's an interesting question. Let's back up a sec. Let's focus on appraisal. So if you go to get an appraisal today, the appraiser appraises as though it were 3 months ago, and then they put on an arbitrary COVID penalty. So they're saying, hey, this is where the property would have appraised 3 months ago, and here's the percentage we think things have fallen just because the public markets have fallen and there just hasn't been enough transactions, and that's out there. And obviously the REIT market, while the stock market has done quite well this year compared to the feeling of Main Street, the REIT markets have fallen dramatically. Most have been mid to high teens, close to 20% type market cap losses. So that piece of it, we know the market is marking to market those values on a daily basis, certainly from an NAV perspective. So if someone comes to us today on properties, you really have to make the question of, is it tenants that are working? Is it tenants that are paying rent? I mean, obviously, the place that is showing, the two places that are showing the most distress right now are hotels, hospitality, and retail, and those are much more difficult valuations than it is to do a net present value of the perpetuity of some cash flow that would be associated with an office building or an industrial building. So I think it really just depends on the real estate and the real estate type. But if you bring an office building to us today, we certainly can value it. If you bring an industrial building, we can certainly value it and come pretty close to kind of where things are going to trade. The question is really on these assets that have broken rent rolls, broken collections, that are much trickier. That there's a thought process of, is this a development play? Is this an acquisition play? How do we value this? So that's really where the art and the science meet together. But for the most part, I would say that valuation isn't a difficult piece on assets that are working.
And we're coming off some pretty strong May jobs numbers, unexpected, given the circumstance, what the quote unquote experts were predicting. So I guess the question everybody's been asking, V-shaped recovery, U-shaped recovery, or something else. What does Andy Farbman think it looks like?
Well, there are certainly people who get paid way more money for their opinions than me on this. I can tell you that either way, we're going to be a buyer and a seller, so it really doesn't matter. And it's just a matter of how we adjust towards those ups and downs. But I think if you were asking me on real estate, and do I think that there are going to be real opportunities as a real estate investor to get quote unquote great buys, there absolutely will. Dislocation creates opportunities, and I believe that our entire NAI network will be able to point buyers and sellers into a place that there's going to be transactions that take place. As it relates to whether the economy is going to come back, I mean, I wouldn't bet against America, and there are clearly some things that are there are clearly some good signs. As it relates to the unemployment numbers, I don't know what unemployment numbers I believe and don't believe anymore. They seem to change. So I don't have a feeling on that. I do think that there is pent up demand throughout this country of people that want to go out to eat, that want to travel, that want to buy things. There's starting to be a scarcity on certain kinds of hard assets that people like for their house, that people want to entertain themselves, whether it's a boat, a car. I mean, all of these things are starting to become low in supply because a lot of factories haven't been working or have been temporarily paused. And so I think that there's going to be some snapback that will be pretty significant. You don't put $4 or $5 trillion to work as a federal government and not see that come out the other side. So, I'm cautiously optimistic that it will be better than the doomsday scenarios as far as the economy coming back, but probably not as good as where the stock market feels today.
That's great. All right, Andy. Well, it was great to chat with you today. Thanks for coming on to NAI Global Diving into Commercial Real Estate, our June 2020 edition. Let the folks out there know, how they can contact you in case they have any further questions or have some real estate needs in the Midwest.
Sounds great. Our website, www.farbman.com, is always a great place to find properties we have listed, contacts inside the company, and my email is always easy, afarbman@farbman.com. And, it's really been good talking with you. Stay safe and productive, and let's come out the other side.
Sounds good. Can't wait to see you in person. And for anybody out there who's interested in becoming a member of NAI Global, feel free to reach out to info@naiglobal.com. And you can also send an email if you have any other commercial real estate needs to info@naiglobal.com.